Greetings, market rebels. Welcome to this week's macro measure. It is Sunday, March 3rd, 2024. It's a little bit afternoon here on the East Coast. I'm Wayne, and I'm going to get into our trustee disclaimer and our trustee intellectual property rights notice first. And then we're going to go into our usual program, but more kind of highlights oriented. I'm going to really try to make another effort to cut these things down by popular demand. Anyway, sticking with the counterpoint, because this is where it is, I think. So I'm sticking with what I think. Anyway, here's the coverage for the week. I'm not even going to go into it. It's pretty much almost identical. They've been doing everything right they can. They did kind of use that NVIDIA EPS to get it going, and now we've been like, okay, that's great. You get move everything up on that. Then you get really a couple more days of selling here leading up to what I think will be the first chart here. But a lot of these things I think are the same. We'll talk about them, but I'm going to, believe it or not, let me see if I can do this really quickly. Stop that share. And then we'll do a readjustment here. So just bear with me for one moment while I get this stuff out of the way and come back to my number 4 screen, number 4. Okay. So I'm starting out with the sectors because I just want to follow up on the cocktail hour discussion that we had on Friday afternoon. The big things for me are that XLK and XLC, those were leaders, and they're starting to try to go again, and they're either making new highs or they're on the brink of making new recent highs, right? In the case of XLC. So XLE's almost starting to join the party as well, which is a good sign. And the real holdouts, other than maybe some things being overbought like XLB and XLI, but the real holdouts now are really only XTN, which is a significant holdout in my book, but also IWM. But other than that, there's really not a lot to really complain about unless you want to. And I'll show that in a very basic way, I think. Let's take a look at the TNX chart, though, because I think this is really what helped make that late week possible. They absorbed, I think, more selling from Monday through Wednesday in the market, but then they were sort of sitting there waiting like, okay, what now? But it didn't take long when yields started rolling over the way they did, and the dollar basically failed to do anything as well. We may as well show that and then move on to our other charts. But that just sort of fizzling out on Friday, that also, I think, could help as well, right? It maybe helped that Friday situation. You also had, the usual OPEX, gamma, buying begets buying, all that kind of stuff. Everything's coming up roses, that whole routine. Now, let's we'll take a look at SPY to get started. That really started to go on Friday so make sure this has got the right recording going on. And it does, and it does. Okay. That started to go. You can see, let me just make this a little larger for everyone, but really, right, we had the first 3 days kind of slide, they hold, and then they start working it back up Thursday and Friday. And that, again, that kind of, right, inversely correlates well with the TNX. So when yields rolled over, they started coming in for stocks. And now, right, they're working their way up to this line that we turned into this sort of pink line last week, sort of the midway area of the channel. And you're still not even above that. So when I look at the SPY, I really want to see it get above that. And then I start thinking it's an odds on that it makes it to my next level up. This is just one of those little things I like to do. And you could even say, I don't like your line, whatever, but that's where I'm at with it right now. So there's more upside here. There's no guarantee this will stop it. There's no guarantee even this line that I just made blue would stop it, right? But I think that's what I need to bring across too in your QQQ, because that obviously has been doing exceptionally well, and you've got a couple lines you're getting to. But this all comes back to, right, why are they doing so well? Why are the diamonds lagging? Why is IWM still lagging? Um, is there catch-up potential in both of those? And I think the answer is yes, if they keep this going. Could they stall this thing, these two big dogs out and still do well? Uh, Maybe. We'll see. I mean, if that happens, but SMH, right? This has been our leadership area. I talked about this in the sector situation. It's coming up to this line, but I usually expect these lines to at least work the first time around. So I do think it probably will hold to some degree, depending on if and when it gets there, should it get there. Uh, I would think it doesn't slice right through it. Having said that, the biggest dog of them all, maybe the stock of the moment, stock of the decade, the way that everyone's been chatting it up, right? If we look at this chart here and we just use the same simple resistance lines that we've got in the other names, you can see there's a lot of room now that it's done what it's done. It catapulted up higher, right? Then bounces, I'm sorry, drops back, starts bouncing again late in the week. And now there's just more fib room. There's more, resistance line room if this thing wants to go. And if that goes, that usually bodes well for not only the SMH, but the entire market. And it brings other semis along with it as well. And again, buying begets buying, momentum begets more momentum sometimes. And especially when you've got hedge funds positioning very poorly yet again, it seems. However, to counterbalance that, the public has apparently put more money into the semis in the past 2 weeks than they ever have, or at least than they have in a very long time. So the chasing is starting at high levels, relatively high levels, because remember, right, you don't have to go back too far and you're not very far away from this stock again, like kind of like doubling in 6 months of time. It could very well do that from some price point, some here in October or whatever. That just gives you an idea of what we've seen. But look, there's an opportunity here. It continues to work. SMH, right? We have to talk about this again, but that's why, like, to me, yeah, I expect this to hit and stop a little bit. Maybe other stocks will struggle if Nvidia does go. Who knows what will happen? But again, I think there's definite potential that this shreds right through there, and there's a much, much higher level it could go to. So if you're new to what I like to try to do, it's not to make predictions. It's just to show where we are, see what's possible, what's most likely, right? What do we have to look out for? Because I think I'm a big believer that getting caught up in projections hinders you. It stops you. You put a lot of time and effort into coming up with a projection, and then I think that brings your ego into the equation, something I think you don't want as a trader. You just want to have that kind of mercenary mindset of, I just need to go where I need to make money and do what I need to make money and be profitable. And it's hard to do. It's not easy to do. You've got to really train yourself, I think, to do that. But one way to help yourself without, tying your hands behind your back would be to not become beholden, right, or captured by your own projections. And so while I see that potential, I'm not predicting it goes there. If you hear me say, hey, I've been having this target price in Nvidia, it's not because I personally think that the stock should rise to that price point. It really means that that's what the charts are saying is a likely place that I think, from reading the charts, where it could go to. And if the uptrend continues, it's kind of, and then I usually come up with my most reserve target, and then I go with the most aggressive one, right? Where you're saying, well, where could it really even go beyond that? But I usually like to work with the conservative stuff. And then if we get there, let's just reassess and see where the charts are. And right now, SMH has got an 80 plus reading on your weekly RSI. So it's overdone, right? Already. The monthlies at 75. This is the leadership space, but the momentum's still there. The daily's overbought too. I mean, virtually everywhere you look, it's overbought. But that's the thing. When you get into these kind of modes, you can't really focus on overbought exclusively. You really have to focus on, as always, the trend, I think, right? The trend is you just continue to see, right, higher highs, higher lows. You see rising SMAs. If you prefer like a simpler way to do it, just look at the slope of your SMAs. All those simple moving averages are all upsloping. They're all stacked. right? From shortest to longest. They're all stacked as well. So it doesn't really, charts don't look that much better than this, but remember, right, we can go into a melt up phase. We can go into whatever you want to call it, blow off top, mania, spike, super squeeze, whatever you want to call it. I don't get hung up on those kind of things. But you could see more than this, but this is starting to get vertical, right? Even if I work with just the most recent trend, and I put a line under here and I do this, right? That line starts there, right? And that's a pretty aggressively drawn line. But if they start putting even more together, you're almost going to have to, if they put another major burst together, you're almost going to have a line that you'll have to put in to support the action that'll be on that slope right there. And when you get towards resistance and you're getting towards another fib level that I think has been valid, you can see how near 50% it kind of hesitated. So that's usually a good sign. Got to 75, pulled back to 61.8, got through there, right? Pulled back to 75, got up to 100, pulled back. So the fib seems to be, right, at least somewhat relevant, right? At least somewhat of value in terms of stopping points overall. And so the next one's up here, depending on how fast they do it, if they do it, right? I'm kind of talking about it like it's a fait accompli, but we know that it's not. But don't let that orange line fool you. Remember, I'm talking about this the most because it's the leadership space in my mind. This, if they shred that through this thing, right, then you really are kind of in mania. I just don't think it'll be shredded on touch one. But again, I don't know, right? You tend to see that when you're getting towards the latter stages of a frenzy, of a kind of like mini mania here, and you definitely could see that. But that's enough talk about the semis. There's still room there, but they're overbought. And why I always talk about this is because I'm most concerned. Anyone that's heard me, chat way too long and hammer on things, yammer on whatever. Um, I just keep hammering the whole idea of position management because I think that's where the rubber meets the road in this trading game that we're all involved with. So I think you've got to be like, hey, I'm rolling, right? I'm still with you here, SMH, but I don't trust you as fully as I have. And if you keep going, I'm going to stick with you, but I'm also not going to get caught. I'm caught with my pants down in terms of riding a 95 delta call, right? When I could very easily get into where maybe I'm in 70 delta and it pops to 90 delta. Well, I'm going to pick that call up, sell it, right, and then immediately roll to something else. It depends on probably some intraday RSI readings. For example, if the 2 hour is at 90 on the RSI, I'm probably rolling to an out of the money. If I get to that point and the RSI is let's say 75 on the 2 hour, I probably would roll to more like a 50, and that kind of a thing. If I've been riding something for a while, and then treat that accordingly, right? Remember, even NVIDIA, even the mighty SMH and NVIDIA, even these have had their little pullbacks, right, at times. And so why would you want to give a lot back with a heavy delta if you've had a really good run when you could give back a lot less with a lower delta? So even if it gets you out, right, it's still better to be in it that way rather than be 95 delta and give a lot back, because you can get, right, strong rollover there in front of earnings, several days of weakness here where you had to live through. I'd almost rather say, hey, this has been a burst. It's getting near resistance. It's short-term overdone. Wham, bam. Thank you, man. Take your profits. And then stay in 50 delta, maybe 45 delta, something like that. And if you give a little back and you say it's over, fine. Then if you start seeing it break out again, get back in. I'd almost rather do it that way than have to live through 95 delta torment, because you just never know, right? News could come out of nowhere. You could get caught. It's a problem. But anyway, let's keep going on, because we saw that there's room still in the Qs. There's room still in SPY. Although they're both getting there. SMH, NVIDIA could be the reason why it blows through the room it has left. But remember, I think I would definitely not lose sight of these two, TNX, and I would not lose sight of DXY, because these could be head faking. If these are head faking, because this is sort of really a little strange here with, right, comments we saw this week. the probabilities are out there as per the CME. So the reality is right now that you are in a situation where rates, to me, like rolling over, and the dollar, they've been trading pretty close. When that's the case, close together, if they both roll over, I'm really wondering how that makes any sense, because I just don't see myself. I don't see how rates start coming down in June. Not with the way things are right now. It would really take some kind of a real shift in the data. I think the inflation data, that it hasn't happened. In fact, I think the inflation data has gotten a little worse, and we covered that last week. So I'm looking at it more like that. I don't see that. So I kind of wonder if there could be a head fake. I'm not saying there will be. I'm not saying that it can't roll over more. I'm just saying that I can't discount that the dollar and the yields are going to head fake lower and then reverse. So just be careful if that starts to happen this week, next week, the week after. If they completely roll over, great. This market probably does really go into a super melty, squeezy, with, super frenzy type blow off mode. That would probably aid the cause. So there's that, and that. Now let's look at I mean, actually, I'll look at diamonds, because I've got another line that I put in diamonds that I thought was appropriate now that more action has passed us by, more actions transpired. And there is another line it could come up to right there that I added, kind of a more aggressive line there. So this would be just, we talked about this thing, making it just to underneath, I guess, really 40,000 in the Dow. And, they'll have their hats ready and all that stuff. They do on TV. But anyway, remember, we've been saying, right, there's more upside in this stuff, simply because if they're going to take it to new all-time highs, which in some people's minds they haven't, in some people's minds they haven't, because it's not adjusted for inflation. But there was plenty of room for them to run this, and that's what they've done. But this looks really good, right? You love that you get up to resistance, it respects it again, pulls back, finds support near the 10-15, starts to go again. So nothing really to say bad about it yet. It too has room. And that's the most, even on the most aggressively drawn line I can muster, that's a little bit more intermediate term of a line rather than simply short term. There's a little bit more room for this thing to move up. But if we start looking at other lines that might be relevant, there's a lot more room, right? So there's a lot more room here on that ultimately than it appears right now. So I'm going to go to more of a max monthly. And we've been saying this, we won't do this for every one of them, but we've been saying that these all had very good looking, the SPYs, Qs, diamonds. They all had very good looking, very big picture charts that if they broke out, they could still be a false breakout, right? I won't say that you can't be having a false breakout right now. And I think this buying begets buying thing, I mentioned it in sector situation. I think that it's causing people to just become true believers and really jump in, or being forced to go in. So again, buying begets buying, but I don't know if it's really a legit thing yet myself. I still question that it is. I might be able to show something on that before we wrap up. But let's move on to probably the most interesting part that kind of relates to sector situation and macro measure, and relates to yields, the TNX that we've been looking at here, and that is IWM. So if any of the big four have potential to go and really start making up room, it would be IWM. And as I mentioned in sector situation, one of the highlights this week is really only this, and I think really this and XTN, the transports, are your only real missing elements right now in terms of being able to say this looks as good as it did in the market, right, on a kind of an intermarket basis, across the market basis, as it did really in the late fall, maybe into the holidays and end of the year, where they had so many things firing. And they're on the verge of making that happen again. Here's the IWM. We're just starting out coincidentally on a big picture, but on a big picture basis, it's more neutral in terms of overbought, oversold reading. So it's got plenty of room to go on a big picture basis in terms of, hey, is it overbought or oversold? It isn't, right? It's not even close. So there's a lot of room here. We've been talking about, right, this, if this does go, it's not only is it way below its all-time high nominally, But if you add the inflation factor in, it's got even more to go, right? So there's a lot here. And this would really be encouraging for a lot of people, right? If they started to see these small caps participate, like, hey, they're even starting to do better now. The small companies that are at most risk, right, when things are rough, they're the ones, they're also now starting to pick up the pace. So that is potentially happening. Here's a better look for us as shorter term traders overall, but there's your IWM, kind of funky little CNH-esque type thing. Not really, right? But sort of has that little bit of resemblance to that. And it's on the cusp of going right now, right? It really is. And you could say, well, don't you see any problems with it? And it's good that you asked me that, because what I wanted to also note is you have to be careful on double top and also false breakout. Your indicators, right? If you want to put any stock in indicators, they're not that impressed right now yet. So if it were to turn from here and roll over, that would be a little discouraging, kind of could set up to be more of a double top. So you're not out of the woods. You're at a dangerous point where if you do trade the breakout, this has become a very treacherous instrument at times. So you've got to get yourself in there and be smart and be careful. They do move this around near the opening. They do move this around during the day. So again, being a smart position manager and saying, look, I'm up some nice bucks here quickly. Let me roll, and now I'll put a little bit of I'll keep my roll losses to a minimum, right? If I start giving back X% on what I bought into for the roll, I'm out, right? Because I'll still be a nice winner overall. And remember, one of the big secrets that we all tend to look past is that you can get right back in again, right? And that's the beauty of the whole thing of being active. You don't want to be manic and overdo it, but if you're actively managing things, what I learned the hard way is that instead of letting problems fester, that what you really have to do is say, look, this is not acting as I expected. It's not acting as it should. It's been acting better than this. I did pretty well. It's pretty overbought, and it's sort of hitting a wall here. I'm just going to get out for now. I'm going to take my money. And then you know what? If it surprises me and starts to go back up, then maybe I'll get back in with a whole new fresh trade. But the difference is that money is now in your account, right? Rather than you living through and overstaying your welcome. And doing business the right way, in my mind, is a lot more important than worrying about your trading cost transactions, because these days, trading cost transactions, I have a long-term view, having been doing this stuff since high school, and I'm not anywhere near high school anymore. I'm very far removed from high school and college. So bottom line is, you look at things really look back on things and you say, yeah, I don't have to worry about getting in and out, because transaction costs used to be astronomically higher. So it's almost, to me, from my perspective, it's almost a non-factor. But this looks good, other than the fact that, right, these are not really screaming yet. But that's also a little relative to here, back on this high. But that's also a good thing, right? Because that tells you there's still more room there. So again, if you see TNX and dollar, but especially TNX coming off, I would think that helps IWM, and it starts taking the next leap higher, right? It finds a way to break out. But remember, it can be one treacherous name. Let's do a look at, we did really the biggies, and we're going to probably start wrapping up here. But let me just I did show you all the sectors and how many are participating. Let me show you one other thing, because I like to look at market breadth, and this is one of the screens I've got for that. And on this screen, I don't want to go through everything, with a fine-tooth comb, but here's your advanced decline cumulative average, right? So this is an average, kind of like a running total that's working over the course of time. It's done well. It's done. And by the way, these indicators are not dependent upon the symbol. You'll see that the indicators are going to really remain. They'll have the same profile once this loads. But I put it on SPY just to be clear. But look, that's our main proxy for the market, because people like trading the ETF, so we don't chart SPX. Anyway, new high, right? Here's your percentage of stocks above the 50, 100, 200. They're hanging in there. They're all moving up or sideways at worst. you've got the cumulative volume index has moved up. It's nearing the highs, right? Your McClellan's oscillator has moved up, and even the McClellan summation, which is a slow mover, it started to sort of flatline and maybe uptick a little bit. So could this be better and sort of more conformational? It could. I mean, there's other ones we could look at too, but you could say that. But look, it's still pretty solid. And with all the sectors working, with TNX rolling over, I mean, you really have to go a long way. I'm still dubious about all this because I feel like it's all just sort of monkey see, monkey do, buying begets buying, sort of buy the happy talk. And that's good for trading. I don't think it's great for investing, but it's really good for trading to just go with it. But everyone thinks they're going to get out. They'll be the first ones out the door when if this turns into be some kind of a mini mirage. But it might not be. It may. We'll see. But you just got to be careful on things. But look, it's pulling a lot of things along with it. It's a lot like what happened in 2023. Said that on Cocktail Hour. I see really the same thing happening at nearly the same time of the year. Maybe it's a little bit ahead of last year in the way that it's behaving. But that's, that ultimately led to that swoon from post-July right into the fall that created the tradable bottom. So we might see some sort of a swoon sooner than later. I still think that it's possible because of how overheated I think they're more likely about to make it. So that's just my concern. The last thing I've got, I want to show down here is this is this it? Let's see if that's it right there. And that's just Twitter. So just real briefly, wanted to show that we are still in extreme greed right here. And here's the timeline. We've kind of, I don't like the way that they've done this, but you can see we've kind of stayed almost pinned up in this area. So it's been kind of relentless, right? It's not been maybe as relentless as it was here. We were talking about how they got things going right into that July earnings, and then it really rolled over after that. But you're still in extreme greed now. You're up near where you've been towards the most recent highs. Sentiment, right? Here's your survey results. So let's see what did they give us here in terms of it. So they usually have a decent comment on that though. Pessimism decreases. That's their comment, right? So not surprising the way the market hung in there, and after Nvidia, pessimism sort of decreased. So people are getting a slightly more bullish. It's been much higher though, so I don't think that's why I'm between these two things not being extreme. That's a couple good reasons to think, and breadth acting pretty well. That's the reason to think that there's still more room for this to go. Chances of the cuts not very high, right? Chances of a cut still 74% chance we sit still by May. They are saying though by June we get that's when we still get a cut. I'll be surprised, but maybe I'm wrong. As it stands now, I'll be surprised, put it that way. And then finally, I'm just going to flash this one. But the recession gauge, according to WinSmart CFA, is at a 40-year high. So remember, the reason why I'm bringing this up is if this turns out to be the case, and that could be, right? Here's why yields are already starting to roll over. Usually people will credit the bond market as to being the market that's more on top of things than the stock market. But it could be, right, that maybe there is something about to appear. I've seen contradictory things, though. I've seen where others are arguing there's some acceleration that they're seeing. So, which would be good in terms of, right, I want to see the economy really hang in there myself. But the reason I'm bringing that up is because when the Fed starts cutting rates, right, and it's becoming obvious that they need to, that usually produces a very poor result 12 months later. That's what we found. We've shown that in many of these videos. So you've got to keep that in mind that, hey, that's really maybe not as good as it looks. It seems great. Hey, rates are coming down. I'll be cheering for everybody that wants to buy an automobile or get involved with a home purchase and, all that kind of stuff. Like kids like my kids that are approaching those stages. I don't want to see them have to get walloped by rates and everything compared to where they just were. But remember, that usually isn't very good. The VIX is getting towards the lows. It's not there. I'm a little surprised. I said it might have a 12 handle by week's end. Didn't quite make it, but almost made it to where it had a 12 handle. But remember, the 12 handle's been just about it, right? So that's getting down there too. So just kind of keep that in mind. So, in to kind of reiterate, I think you are in the latter stages. You could be still see kind of that melty, squeezy phase that we've seen so many times over the last several years. But there's a lot of point counterpoint still, which is why I'm sticking with it. I still think you've got to be like a DEFCON 2, DEFCON 2.5, where you're really smart about what you're doing. If the blow off, squeezy, melty situation occurs, great, keep rolling, right? That's what we do. But just be very careful if those yields turn back the other way, or if they start plunging. Remember, if they start plunging, that's going to probably initially be good, but ultimately that could be not so good, because that's maybe telling you that despite inflation not really coming in all the way, and in some people's eyes re-accelerating a little bit, and that's what the data seem to show, the Fed might feel forced to cut because suddenly the wheels start coming off of this economy. And if that's, you're really in a pickle then, right? With where you're still inflationary, you're cutting rates, and you're already where the economy's really starting to sputter in a big way, and it's obvious to everyone. So just keep all that in mind. As always, it is point counterpoint of, unfortunately, again this week. But the one thing we should note before we close is that breadth is good. The sectors are coming along for the ride, even if dubiously, in my opinion, my guesstimate. And but you still have room on all these things. You still have room on all of them, and the trend is up still. And we haven't cracked any significant support, even minor crack of support anywhere in the big four we just looked at. So if you just take a snapshot in time right now, it's hard to say what's wrong with this market. You really have to be, I think, picking a fight where there really isn't one yet. That can change very quickly, but as of right now, at the snapshot in time, it is what it is. And so I think you have to give the bulls the benefit of the doubt until you start to see real signs emerging, real problems, real cracks showing up. I think you still have the opportunity maybe for a really parabolic, squeezy kind of exclamation point conclusion. I thought the NVIDIA EPS could be that. It turned out it wasn't. They did obviously move the market up on it, and probably the afterburners kicked in on that late this week when TNX rolled over, but it still didn't get extreme, right? That's what I thought could happen. Didn't happen. So I'm still thinking we could see that. There's no rule that says that, hey, you have to get super squeezy melty before this all ends, but it does happen quite frequently. And I don't think we're there yet. So we'll see. Remember, the first step is to get on the first on for as far as the spies goes. You got to get above, let's call it 518. By the time it gets there, should it get there, it's probably going to be closer to 519, 520. But if you can get above there, then you could be working your way towards the other side of this upper side of the channel, which is going to project even higher. So there'll be even more room. So again, wouldn't pick a fight yet. Just be smart about what you're doing as always. And I do hope that you got something out of this video that can help you out this week or 1 week in the future. I want to wish everyone a great conclusion to their weekend, a great trading week ahead. And I will be in touch through all the various ways that I try to chime in during the week. Thanks.